Hey, good day, Bob, Trade Genius. 15th of December, the Ides of December, if you know your Julius Caesar. And I wanted to go through a number of charts here and just talk a little bit about extremes and reversals because I think by now everybody and their brother is expecting the market to crash. And it might, but those who traded in 2008 and also in 2000 know that derivatives play a big part in trading. And when you lean one way or the other too far, the there are trades that go against that as people are recovering their positions, or forcing people out of a trade because they're leaning too hard one way or the other. And that's why I'm a big fan of linear regression lines, and I'm a big fan of oscillators because they tell me when things are not normal and are likely to return to mean. And I'm just going to show you a number of charts here. I drew these lines months and months and months ago, and my view is in here. There's a weekly, and so this was a sell signal that came out back in October, and it's still, it has not recovered yet. But what's interesting to me is that now SPY has broken down through. This is three standard deviations below its linear regression line. Now, it can be totally justified. It happens a lot. But when it gets down like this, there's a lot of people that have correctly identified this trade and have made a lot of money that are going to recover that profit. And then there's going to be others that say, hey, this is stretched. We have an opportunity to force people to cover. And that you have to watch that. So I'm looking, if we get anywhere down in this area here, then you need to start looking for a bounce, and it could be violent. And next week we have news that can actually do that. So if you're leaning hard short the market, you need to start thinking through how you're going to protect yourself if the interpretation of the Fed meeting is for the algos to really ramp the market. Just FYI on that. And so just keep an eye on this area here. If we get a push down on Monday, Tuesday, then I would be covering. And I have IWM puts I put on. I'll just show you something here. Is we've been asked for a long time to do options trades, and so I've relented because we're focusing now on the equity side on less and less stocks and sectors going into next year. So I'm going to do options for the major commodities and the major indexes. And so here's three that we put on. VXX we put on last week, and UNG we put on Tuesday, and IWM we put on Friday. And so here's the percentages we are right now. And these are spread trades too, for the most part. So these are blended with short hedges in there and calendars. And so we try to take as much risk out of the trade as we can to provide good returns for small amounts of capital. All these trades are invested less than $1,000 on my part, and great returns. And so, and I'm not going to charge anything more for this as part of the ETF service. So if you're interested in what we're doing, we're going to be following this with oil market, the natural gas market, the three main indexes. We'll be doing it with gold and silver as well, and GDX, GDXJ, and then a couple of the triples will be put some trades on as well. I normally trade from the put side because when you have relief rallies, you have what's called volatility crush, and it takes the value of your calls down. And so I rather put money in puts because the volatility then spikes and it adds to the value of your puts. if you're early enough. If you're late, you're not going to get any of the benefit from it. But my intention is that I think UNG has a ways to go. I'll show that to you in a second. VXX is actually all my money so far has been made on the short side of the hedge, and I'm playing for a volatility crush on VXX after the Fed meeting, and the fact that volatility hasn't really spiked heading into this meeting is a tell to me that I think they're looking to probably reverse this market here pretty soon, and so that's why I caution people. But back to the charts. So anyway, you can get this. Go tradelikeagenius.com. If you want to just check us out, you can just buy a monthly subscription to ETF, and just go into the signals area there, and you can use promo code HOLIDAY, and you can get 50% off the monthly fee, which is essentially $24 a month to check it out. And if you want crypto and an ETF, you can get it for $49.50 a month for both of them with the holiday code, but it expires tonight. And it's a no-brainer. These trades here were up already over $700. So you can enjoy some really good trades. So anyway, back to the charts is that's IWM. The other one I'll show you too is, and so I'll be stalking in the oil area here pretty soon, is let me go to oil here, is that this fall has been pretty hard, and we're also at 3 standard deviations too. Now this bear flag here may play out and have it come down some more, but just so you know, I am bearish the market. I'm bearish oil, and I'm bullish the precious metals. But when you get too far too fast, you got to look for relief rallies. And so I'm looking for it plunge through here. And once it does that and it comes back in, wherever that is that I'll be looking to short, drip puts, or the other oil ETFs, and just take advantage of that. This move's been pretty aggressive, up over 300%, and it's already pushing up pretty high too. And these leveraged shares is where I made most of my money in 2008 shorting these leveraged shares when they just ripped up too high, and you may have to hold on for a day or two, but once the reversals happen, this can go to 15 back to 6 in a heartbeat, and it doesn't take much of a move in the index to make it happen either. So if you need to start thinking about taking profits in these things pretty soon, especially when you get over 2 standard deviations. You get to 3 standard deviations, then it's going to do something like this. Okay, and then this one here went from 26, and by the time it bottomed, it went to 10. So it lost almost 70% of its value. And so these are things to keep in mind when you trade these things, and that's why I like to short them when they get too high. So and then I think I showed you guys IWM yesterday, but the same thing here, and it's closing in on its just on this recent move here, and I put the fib lines out there because I'm in the trade, and I'm likely to cover if it pushes through this line here. I'll cover, take my profit, and then just wait and see what happens next. But for me, I'm looking for a bounce and then a fail. But we need to have this move right here. This is a bit of a bear flag. So depending on how aggressive this bear flag is, we can go from 170 to 156, and then you have 14 points. You got 153, 139. See, it's almost at its point where it's resolving itself. So anyway, that's what I want to talk about now, and I think next week we probably can expect a relief rally. I think they're going to scare the children likely, and then they're going to pop it, and then we'll see what happens then around Christmas. But you got to realize traders are going to be taking trades off the books. They're going to be gone the last 2 weeks of the year, so the market's just going to skinny down. And I think a lot of the big selling is going to happen in January, where people are going to are going to get out of their positions so they can save a year in taxes, because there's a lot of people with a lot of profit since 2009, and I think you're starting to see that starting to disgorge, and I think there's a reason why the volatility hasn't been up. People aren't putting the puts and calls on to the extent that they have been, because I think people are literally going to be exiting the market, and that's something that people need to be aware of. And that's going to be the most insidious slide, because we're just simply going to go down, and I don't know if I'm in the crash camp or not. I just know that we're overvalued, and I'm going to go back to SPY and show you what I mean. Here are all the support levels. So once we get through this level here, I expect a bounce. Then I fully expect us to get down to this level here, maybe bounce again. Then I fully expect us to get down to this level, and then in this level here is the 2016 support, and then here's where I think we're eventually going to get to. Right here is the beginning of one more. Sorry, let me zoom in here. Yeah. Okay, right here, the beginning of 2016. So I think we're going to get down this 181 area, because this is when they did that low volatility ramp right here. And I think this whole thing gets taken away. Okay, this was a kick save when China was imploding, and they just dumped all kinds of money into the markets, and all the central bankers worked in unison. I don't think they have that capacity this time. And I think we're going to see central banks fail for the first time. It needs to get down to this level here, and then we'll wait to see what happens. This is more of a fair value. If we are right here right now, the market would probably be limping along. But this move coming down here, it's going to be quite a shock to a lot of people. And that's why we've just been telling people, look, it's not worth being in the market. You were given 2 opportunities to get out. In fact, you were given even a 3rd opportunity here. And I think they're just going to punish people, because they're going to constantly be giving hope to people. Just like in 2008, I think we solved it. I think we solved it. I think we solved it. By the time they solved it, it was 50% below, 50% below where the highs were in 2007. And I think that's the same thing happens here. Look, they want to freeze retail while they get out. And, there's no reason you need to be in the market right now. Even if you took a whole year off, what's the market going to do? Go up 10% on you? I don't think so. But the money's going to be made on the metal side, precious metal side, because as they unwind this volatility trade, they got to unwind their short precious metal book too. And then governments around the world are going to be just pouring fiscal money at the problem to keep the yellow jackets from going worldwide. And I think that's what's really going to help. And we're going to get into more of a stagflation kind of environment, where the stock market goes down 37% and GDP is basically flat. And then you're going to just see the cost of living rise. And I think that's why you see Trump collapsing trade. I think there's a lot more to this than meets the eye. When your currencies are suspected by your trading partners, you trade less. And I think Trump is front running that problem. Anyway, thanks for listening. TradeLikeAGenius.com. Have a great day. Love to see you trading with us, and let us help you make some money in the markets. Bye-bye.